Welcome to Real Estate Investing for Women. On this show, you will learn how to create wealth through real estate the blissful way. That means with very little stress and very little time. We talk about strategies, mindset, heart set, money smarts, resources, and so much more to ensure you're able to create the success you most deeply desire. Now, here's your host, Monica Sawyer.
Today, I am so excited to welcome back to the show, Amanda Hahn. Yay! As both a tax strategist and real estate investor, Amanda helps investors with strategies designed to supercharge their wealth building using entity structuring, self-directed IRA investing, and income offset opportunities to keep more of what they make. Amanda has a highly rated book, Tax Strategies for the Savvy Real Estate Investor, on Amazon, and has been featured in prominent publications including Money Magazine, Talks at Google, CNBC's Smart Money Talk Radio, as well as Bigger Pockets podcasts. Hello there, Amanda. How are you?
I'm doing good. So excited to be back.
Yeah.
Bunch of tongue twisters in my bio.
I've been having that problem all week. I keep saying my internet's not working. My tongue has not been working. It's been funny. My poor listeners like, oh my God.
I like that excuse. I'm going to use it in the future, but
exactly. But it's so nice to see you again. Thank you so much for offering to be on the show again. You're always so full of amazing information. So I really appreciate your time.
Yeah, I'm excited to be back and talk everything taxes.
Yeah, everything taxes. Yay! You say that with such a smile. So Amanda, you've been on the show once before, so everybody kind of knows you, but why don't you give us like a really high level, kind of how you got into this story?
Yeah, that's interesting. So I am actually the third generation of real estate investors in my family. My grandparents, when they first immigrated to the US, they invested in real estate. My parents invested in real estate, although not full time. And then my husband and I decided to invest in real estate after several years of working in a large firm in public accounting where we helped real estate investors with their taxes. But it wasn't until I read Robert Kiyosaki's Rich Dad, Poor Dad book when I realized that's something that I should probably do. Because my job was really at the time was to help real estate investors save taxes. But for some reason, just never dawned on me that was something I should be doing for myself until I read Robert's book. So that's kind of how we got started.
It's so fascinating because I'm kind of a legacy investor also. My parents were immigrants, and so they started investing in real estate. I just want to point out to everybody that's listening to us, think about that. Like all these immigrants come into the United States and they know, like they've heard from somewhere else in the world that the way to build wealth in the United States is by real estate. They don't have those opportunities in their own countries, right? Usually. And so they come here, they buy real estate, they build wealth. They do amazing things for their families. And yet here in America, sometimes we're a little bit complacent simply because we don't know how valuable the opportunities are. We take them for granted, right?
Yeah.
And so as Americans, we're kind of like, oh, and it sounds like Amanda had the same experience as me, like, oh, that was fine for you, but I don't necessarily want to do that. Right? Like we don't really get the value of the opportunities that we have here. So it's so funny because, I was kind of like, my dad was like, you really should get into real estate, not as an agent, as an investor. And I was like, no, I don't want to do that. It's too stressful. Right.
Right.
So, so I think it's funny that for you, you had to get the advice outside of your family.
Exactly. I know. I always tell people, in Robert's book, he talks about rich dad, poor dad. There's two different people for him. For me, it was kind of the same because my parents and grandparents, although they did real estate, but they always taught me the traditional route, which is get good grades, get to a good college, get a good job. And so when I got into one of the largest public accounting firms, it was like, that's it. I made it. I've already attained my life's goal. And so they didn't really talk to me or push me in the direction of being a real estate investor. So I kind of had, like you said, to get that from an outside,
Isn't
someone
it?
else telling me, and then, oh yeah, maybe that's what I should do.
Yeah, it's so interesting. And actually, I had both from my parents too. They like, you have to go to school, get good grades, go to a good university, get a good job. But they did also say you should be investing in real estate. And my dad had me managing some of his properties, which is what stressed me out so much as a kid. I was like,
Yeah,
I don't want to be doing all this stuff. But he was trying to help, right? So
yeah,
just so yeah, we have that experience as immigrants. And ladies that are listening, just know these opportunities are amazing here in America. We don't get those in other countries. And I'm so proud of you for listening to this show. But like I always say, we need to take action, right? Taking advantage of those opportunities is the only thing that's going to grow your life. So I just love that story, Amanda. Thank you. She's like, I had to read this other book.
yeah, right. Yeah.
So funny.
And I totally understand, like for me, when I was growing up, we lived really close to my grandparents, and it was the
Mhm.
same feeling of real estate. It wasn't like glorious to be a real estate investor. It was more of a hassle because we did our own work during tenant turnovers. And I remember when I
Mhm.
was really young, when my grandparents would, take me and my cousin out to the properties. When people moved out, we would be there cleaning up and doing painting and all that kind of stuff, right? So it's not just like, wow, this is such a cool thing. It's something we didn't really want to do. And but it's different, for investors now, you don't have to be doing that kind of
Right.
stuff, right?
That's right. You definitely don't have to. It's not, people, it's not glamorous work. I know people meet me and they're like, wow, how did you do what you do? Or they all think it's so glamorous. And I'm like, this is not glamorous. First of all, it's like, it's the most intuitive thing on the planet. Buying a
Mhm.
home and either living in it or letting someone else live in it. It's the most intuitive business, right? We
Right.
all need housing. But yeah, I do still manage my property. So I'm not at painting, but I'm hiring somebody. I'm still vetting out my people. It's not glamorous, but what is glamorous is the levels of money that I make and the wealth that I've built working so few hours. So yeah, even though I might be there 4 or 5, 10 hours during a turnover, like what do I get for that?
Yeah.
And I think that this is something, I love this conversation because I think that this is something that's really important for us to point out because every job has its glamour factor
Mhm.
and the grunge work that has to happen. As
Right.
a tax consultant, like Amanda is beautiful. For those of you that are watching, right? She's this beautiful woman, beautiful voice. She's running this company. She's wealthy. Obviously, she invests in real estate. She's very successful. There's a level of glamour around that, right? But she's still the one that's like punching numbers. That's the not glamorous piece, right? Everything that we do in the world is going to have this is really awesome. And this is the things that we actually have to do to make it happen, right? And so just keep that in mind as you're thinking about all these things that you would have to do in real estate. First of all, you don't have to do all those things, but yes, no matter what you're doing, you have to do both sides, right? You can
Mhm.
have this. We're actually recording on Valentine's Day, ladies, so you kind of like get to hear when we're recording, but we're on Valentine's Day. This is beautiful day of love, right? We're celebrating love and romance and stuff like that. You guys still wash dishes together, clean the floors, wipe your baby's butt when they poop. You just do all of those things, right? There's the beauty and the glamour and the romance, and then there's the living life piece, right?
Yeah.
So that's true for everything that we do. And sorry to belabor this, but I feel like some ladies need to hear it. They want to do the things that are really cool, but they don't understand. And not just ladies, this is everybody. As you're
Mhm.
learning something new, you've got to do those other things to make the glamorous end result that you're looking for, right? And it
Yeah.
doesn't have to be painful and unhappy or any of that, right? But it's par for the course. There are things that you're going to need to do that don't feel glamorous. Does that
Yeah.
make sense, Amanda? Do you agree with me on that?
Yeah, definitely. And I think just, as it relates to the tax side of things, not for me as a CPA, just for investors, a lot of times people who either hear me speak, on a platform like this or read one of our books will say, wow, I love hearing the stories about how people saved 10,000 or $50,000 in taxes. And I really want to do that. And it's kind of like, does it happen automatically, right? Because I read the book, now I'm going to expect that to happen. And it doesn't happen that way, right? So the story is the glamour of this is what happened. But what you're maybe not really seeing or paying attention to is what did that investor do during the year, so that by next April, when they're meeting with their tax person, they have everything in place so they can get the tax savings. So
that's exactly right. The prep work, right? That's the
work,
non-glamorous stuff. And it's true, there's a lot of stuff. You can't just expect magic to happen on April 15th.
right?
So yeah, that's awesome. I love that. So let's talk about investing in taxes. So what can you write off as an investor? Give us some ideas.
Well, I mean, when it comes to write-offs, the IRS really sees investors as business owners. And by business owners, I don't mean like you have to go out and get an LLC or a corporation or anything like that. I just mean you're in the business of investing in real estate. So whether you're a landlord, right, you're getting rental income, you're in the real estate business. Or if you're a flipper or wholesaler or even a realtor and you're making money in those activities, then you're in the real estate business. And so pretty much all the things that you hear people talk about when they say, oh, business owners, they get all these incentives and loopholes and benefits. Well, the vast majority of those write-offs are also available to us as real estate investors too, because we're business owners, right? And so I think investors are always really good about writing off things that are specific to their properties. So if you're a landlord, let's say, most people don't forget to write off their mortgage interest, right? That's a lot of money that they're paying to the bank. So they're not going to forget that. Or property taxes you pay to the county, maybe even paying like your property manager to manage properties or repair. So people are usually pretty good about those kinds of expenses and not missing out on them. But what I find is that a lot of people miss out on what we consider overhead expenses. So expenses you're spending for your real estate business, that's not necessarily specific to a property. So, maybe you bought a membership to be in some kind of a club or a group, right? Like a women's group or something. Or maybe you bought some books to learn how to invest in real estate. Maybe you bought a tax book to learn how to invest in real estate and save taxes. And so those are things, or, you're driving your car for real estate purposes. Most of us probably use our cell phone and laptops and all that for real estate. So even though these are things that are not specific to any property, but they are for your real estate business as a whole. And so it's really important to make sure that as an investor, we're tracking and writing off those expenses because, as tax rates go up, and I think we're probably all in agreement that tax rates are not going down, right? If anything, they'll stay the same, but, possibly go up. And so as tax rates go up, if you have $100 worth of expenses, and if you can save $20, $30 in taxes, that's pretty significant. And $100 might not seem like a lot, but if you are tracking all those throughout the year, then you're talking maybe a couple $1,000s or tens of thousands of dollars. And that's when the savings could be so significant that you might save enough money for a down payment on another rental property next year, right?
So I just love that last piece that she said. Is what if instead of paying taxes, we were buying another rental property? Now, understand that Amanda and I are not advocating doing anything that is not totally legal, but these are things that are legally accessible by us, right? Just if, as Amanda says, we pay attention and we prep a little bit, right?
Yeah.
So, but it's never been positioned that way, Amanda, where you could take the money that you are not paying in taxes, or you might get in a refund or however that shows up, and then turn it into another rental property and another opportunity for cash flow, right?
Yeah, because when we pay, let's say it was $10,000 we paid in taxes, we know what the return on investment is, right? It's zero.
That's right. We get nothing.
Yeah,
well, we get we get the stuff that the government gives us, but we don't get personally,
roads, right?
Yeah.
Roads, bridges, all that good stuff we need. But if you instead had $10,000 more to invest as a down payment, that could be like $50,000 worth of real estate, right?
Mm-hmm, absolutely.
And so that could be, a small property, or at least, part of a property. If you do that year after year, it could really supercharge, how quickly we build our portfolio. I think a lot of real estate investors I meet oftentimes will say, I want to get into real estate, but I don't have money to invest, right? Or
Mhm.
we're always like, oh, how do we get bank financing? How do I get investors' money? How do I partner with other people? Although those are all really great ideas and things we need to use as an investor, but why not look in our own pockets first, right?
Mhm.
Because this is money I'm making. If I can keep more of my earnings, then I already have more money to invest. Then I don't have to worry so much as to where am I going to find money for my next deal.
Mhm. Yeah. And especially for, like you say, as the down payment. So you can use that money to invest in another deal, self-finance. You could also use that money to do a partial, like your down payment for several properties or for one property in a nicer area. So you can make some different choices also about the kind of business that you want to run, right?
Yeah, definitely, definitely. And I think people don't look at it that way. People are always just like, oh, well, I don't want to pay the IRS. I'm going to save money. And, for people who are not of the investor mindset, I've met people who are like, oh, I got a big refund. Now I'm going to go on vacation with it, or I'm going to, buy something personal. But that's not the goal, right? If you save the money and you use to invest in real estate, that new property will probably give you more write-offs for next year. And it's kind of like a compounding effect of saving, investing more so that you can save more, so that you can invest more, right?
That's right. So eventually, yeah, and of course, along the way, you're going to be enjoying that cash flow, which will be supplementing, and you can partially reinvest it into your business. And also, of course, you deserve that vacation, right? So, but it is definitely a mindset switch. Amanda and I had the pleasure of meeting in San Diego. We had a boss lady
Yes.
weekend. And so I met with all these really amazing women that are investors in real estate or in some iteration, right? So they do something around the real estate investor thing. And it was so funny because we all carried fairly nice purses. Like I'm not a purse person, but we had our nice clothes and our nice purses. We all drive nice cars and have nice homes. And Amanda was talking about the tents that her kids were building, right? In their cute bedrooms and all of this stuff, right? We've got nice lives. But when you talk to any of us about um, we actually had met another woman, or we're talking about another woman, not talking about her, she was a friend of ours, and she had just bought a $50,000 ring. Well, that's certainly her right? Like if that's what lights her up and is beautiful, she loves that, that's awesome. But all of us had the reaction of, that's another house.
Yeah.
Right? Like, I love jewelry. My husband just bought me another $6,000 ring for our 25th wedding anniversary. Like, I love jewelry,
Yeah.
but man, that's a house, right? And
Sure,
so
yeah.
it really is a mindset of course you should enjoy your life. Of course you should have things that you love and make you happy, but understand that it's a balancing between our businesses and those things that we think are going to make us happy, right?
Yeah.
So
Yes.
we do need our vacations. I'm a choose bliss person, right? Part of bliss is about really loving the journey, and vacation is a big piece of that. But balance that,
Yeah.
right?
Right.
So use some of that money for investing. And if it's tax saving money, honestly, that is business money.
Yeah.
So business money should be reinvested, maybe. I say the
Yeah.
word should, but you guys can decide, right?
Yeah. And I think too, it's just making that conscious decision and being honest with yourself in terms of what you're doing. Sometimes I'll meet people who say, hey, I want to get into real estate investing. I hear all these great things about cash flow and appreciation and, tax savings. And then by the next time I see them, they're like, oh, well, I was looking at real estate and then I bought this really nice big home. For myself, I decided to upgrade, and this is like an investment. And but just being really honest with yourself, and that, well, I didn't actually end up buying an investment property. I ended up just buying something nice for myself and my family. And like you said, there's nothing wrong with that, but understanding that nice large home you bought is not giving you cash flow, right? It's not giving you additional tax write-off because it's not a business. So just understanding kind of the differences between, every decision, the financial decision you're making, whether that's more for personal enjoyment or whether that's for true investment and growing your portfolio.
Exactly. So, okay, cool. That was great. I love that. It is an interesting mind shift around that. So I'm glad we talked about that. So do you need an LLC in order to save on taxes?
Yeah, that's a great question. It kind of piggybacks off of your first question, right? What can you write off? Because I
Mhm.
think a lot of people, a lot of investors are under the assumption that in order to write off anything, you have to have an LLC or you have to pay for it from your LLC. And that's not true at all. So, what I was saying earlier is as real estate investors, we are business owners in the eyes of the IRS. And the definition of business is not LLC or S corporation or C corp or any of that. It's just whether you are investing in real estate. And so we have a lot of investors who are landlords who don't have LLCs, right? For one reason or another, they choose to hold rentals in their own name or just in the trust or something like that. They can still write off all those same expenses we talked about, a car, a home office, cell phone, travel, all those things are tax deductible. So it's a common myth that people feel like, oh, well, I don't have an LLC yet. Let me go ahead and form an LLC so I can take these deductions. When more than 90% of the time, those normal expenses can be deducted regardless of whether you have an LLC or if you operate in your personal name. But when it comes to taxes, so we kind of break it out into two different groups. Like if you have rental income, and that will be rental from single family, multifamily, commercial, all types of rental income, versus the other bucket, which is more active income. So active income would be like if you're a realtor or wholesaler or fix and flipper. And the reason we have those two different buckets is because taxes are treated differently for those two different types of income. And so for most people who are landlords, right, with rental income, doesn't really matter from the tax side whether you have an LLC or not, because you don't pay self-employment taxes. Okay, so you just pay income taxes. Again, you can write off the same things. So for landlords, the reason to have an LLC would not be for tax. It's mostly for asset protection purposes. So your attorney might say, oh, well, you obviously don't want to, lose all your assets because one of your tenants sue. So let's put that in an LLC or a partnership to get the liability protection. Right. Now, on the other hand, for active income, flipping, wholesaling, that type of stuff, you also have to pay self-employment taxes. So not only do you pay federal and state income taxes, but you're also paying into Social Security, Medicare. So that's another up to 15% taxes. And that's where having an LLC or S corporation could help minimize those. So, it's difficult to say if you should have an LLC or not, and investor number two should have one. That's all based on your unique situation. How much money do you make in real estate? How much other income do you have, maybe from a job or a business? So that's something that you definitely want to plan out with your tax person. But on average, for someone who has active income, let's say you have $100,000 of taxable profit from flipping or wholesaling or as a realtor, if you rent it through an S corporation or something similar, you might save up to $7,000 in taxes just with the structuring. So that's where, it typically makes sense to have an entity, right? But in neither situation, you can always write off the same things, regardless of whether you have an entity or not.
Got it. Ooh, I loved the clarity on the two different ways that works and the way the IRS looks at that. So what
Mhm.
would you say are the biggest mistakes that real estate investors make when it comes to taxes?
The biggest mistakes. Gosh, there's quite a few of them. Well, since we're talking about entity structuring, right,
Mhm.
right now, so I think there's two big mistakes on the entity structuring side. One is using entity structuring almost as an excuse just to delay investing. And this is more for newer investors, because I do hear this quite a bit like, oh, I'm going to invest in something in a couple of months. And then a couple of months later, they'll tell me, well, I haven't invested yet. I couldn't decide on a name for my LLC, right? That's an excuse to say, well, I didn't do it because I don't have an LLC yet. And one way to overcome that is to understand you don't have to have an LLC to buy rental properties, right? We just talked about it. And even if you bought a property now, you can always move title into an LLC after the fact. So we don't have to worry about that. And I think more for a lot of the women investors is we have to find that perfect name, right? Blissful Real Estate LLC, or maybe that's not good enough, right? Super blissful, something. And so people get caught up in all that instead of focusing on, like you said, taking action and doing the real estate. I think the other most common mistake on the entity side is forming the wrong type of entity. And that's one of those things that, if you form the wrong entity to hold your real estate and you don't really find out until way later that you were in the wrong entity, it becomes very costly to unwind that. We've seen clients who've owned real estate inside of S corporations for 5 to 10 years, and it's very difficult for them to unwind it because now the property is appreciated. And so the only way to unwind it is to likely pay a lot of tax to then get it out of the entity's name into the correct kind of entity. So there's kind of a fine line between, not waiting too long to form it, but then also forming it correctly from the start. So you don't have such costly ways to, have to unwind that structure.
That to me seems a little scary, actually, when you think about, I have to unwind if I screw up. You know what I mean?
Yeah. And sometimes, like I say, you can't do it. There's no real way to do it where you don't have to have taxes. And so entity formation is definitely not like a do it yourself, right? Or like, hey, I was on this podcast or I read this book and let me go ahead and do it. It's something that you want to sit down with your tax advisor and talk through, because some of the questions to answer, it's not just where am I buying property, but it's also how much is the equity in my property? What's my exit strategy? Am I just selling it like flipping, or am I going to hold it for 5 years or 10 years? And also what other income am I getting from this property? Is it a long-term rental, short-term? Do I also, if it's a, larger property, am I also going to have vending machines or washer and dryer? All these things help determine what type of entity you're going to hold your real estate in. And so by having that conversation up front, it helps to minimize this risk of, getting into the wrong type of legal entity to begin with. Right?
Got it. Okay, perfect. So we're already out of time, Amanda. I don't know.
We just started.
I know. I know. So the other question we were going to talk about was, can we buy rental properties in retirement? And the answer, of course, is yes. And ladies, you've heard from other people talking about self-directed and stuff like that. One of the things that I really wanted to talk to Amanda about was really what are the logistics around that. We've gotten a pretty good high level on the fact that it's possible and kind of what that looks like. But I asked Amanda to do kind of a breakdown on really what that looks like. And so, Amanda, let's do that in extra. Does that sound like fun?
Yeah, definitely.
Okay.
I think I have a little different spin if, for the custodians, when they talk about what you can and cannot do. Usually my job is on the step before that, is working with investors and figuring out what type of account is best for you. How do we use that not just to invest in real estate, but also how do we save taxes, right, with the money going in? So yeah, lots to share on that part too.
I love that. Yay. So we will do that on extra. So we'll be talking about investing in real estate through retirement funds and from a tax perspective. I love that. So that's going to be an extra. Before we go into our 3 rapid fire questions, Amanda, let's talk a little bit about some of the things that you're offering my audience today. So you do have a free ebook, correct?
Yes. Yeah. We have an ebook. It's called Tax Strategies for Real Estate Investors. You can find it on our website at keystonecpa.com. And it just goes a little bit more in depth in terms of a lot of the things we talked about today. We talked about maximizing write-offs. In the book, the ebook, we talk a little bit about how to take a tax deduction by shifting income to your kids. So if you have kids or elderly parents who are helping out in your business, how do you do that? We should also go through, we talked about entity structuring today. In our book, we break down some of the questions and what you should be considering when, before you meet with your tax person on how to use legal entity structuring correctly, and, a lot more stuff. So yeah, just check it out on our website.
Perfect. Yay. So that's awesome. So that's keystonecpa.com/ebook-download, or it sounds like you can just go to the
it's just on, I think we have it on every page.
Okay, good. So that's super easy. Okay, good. And then you also have a mini course for real estate investors specifically. Could you tell us a little bit about that?
We do. So our mini course, it's an on-demand course for beginner investors, and it's delivered via, in the course of 4 days. And like I said, it's on demand, so you can, get the content when you have time. And we really talk about the power of tax savings, like how do you use tax savings to supercharge your wealth building. We go over the top 10 most common tax strategies for all types of real estate investors. And we talk about kind of the 6-step process, like how do you have an effective tax plan, right? I think it's not a surprise that as real estate investors, we can save on taxes, but the question is always how. What do I need to do? What are the things I need to do so that I'm ready for next April? And then we also have like a risk assessment as part of our on-demand course. So a set of questions to help you try to figure out if you're overpaying in taxes, because that's a question we get a lot. How do I know? Do you think I'm overpaying in taxes? And I don't really know because I don't know the answers to some of these questions, but hopefully you will by taking this assessment yourself.
I love that. And so all of that goodness is only $39, ladies. So go get that. It's really, really good stuff. And you just have to go to blissfulinvestor.com/Amanda tax. So it's blissfulinvestor.com/Amanda tax. So get that. I know that that'll be really, really helpful. Amanda covers a lot of very good stuff for real estate investors, specifically because she herself is an investor. So she kind of knows what we go through, right?
Yeah, the good, the bad, the ugly.
And all that yummy cash flow.
Yeah.
It's awesome. Okay, so Amanda, are you ready for our 3 rapid fire questions?
I think so.
Okay.
We'll see.
Yeah, here we go. So tell us one super tip on getting started investing in real estate.
Super tip, I think, I would say just do it. Definitely for me, because I'm a numbers person, the way I look at it is look at the numbers. If the numbers make sense, then just pull the trigger. Don't overthink it. Don't delay. Don't overanalyze it, right? Know the main things that you need from the property. If they meet your criteria, then I would go after it.
Okay, yay. And then what is one strategy for being successful as a real estate investor?
Successful as real estate, I think the main thing that when I look at, because we work with new investors, advanced investors, I think one thing that I see across some of my more advanced real estate investor clients is that they really treat real estate investing as a business. And by that, I don't mean LLCs, right? I don't mean set up an LLC. I mean, they run it like a business in terms of they have the right teams in place to do the things that maybe they're not good at, right? So if they're not a good bookkeeper, they have a bookkeeper in place. If they're not good at managing real estate, they have property managers in place. So really running that as a business and creating systems around everything you do. So as you scale your real estate, you don't have to recreate the will every time. Right. So those are things I think I see with most successful real estate investors.
That's awesome. Yes, I have frequently said that systems equal bliss. They give you freedom, right? And that's a big piece of being blissful is having the freedom to choose what you do with your time, right? Yeah. So systems are key to that, systems and teams. So I'm totally with you.
That.
Yeah. And then tell us one personal practice that you do daily, Amanda, that contributes to your success.
Oh gosh, it's not really like a system, I would say. It's more of a habit. So my habit is I don't have a to-do list. My thing is more if I have something that I know I need to do is important to me, I just add it to my calendar directly so that time is blocked off. So when the time comes, that's when I do it. So I do try to, organize and prioritize what the things I have to do on, but it's not really in a list format. It's more just, get it on the calendar so that it's done. Right.
Time allocation.
So, yeah. I'm a big proponent of that because, before when I had to-do lists, they just kept getting longer and longer. It's the more to-dos and more to-dos. And then you don't have time to go look at to-do list anymore.
Yeah, got it. I love that. Nobody's ever said it that way before. Thank you for that.
Thanks.
Yay. So thank you so much for all that you've offered on this portion of the show, Amanda. It was awesome.
Yeah, I'm so excited to be here. I'm happy to come back anytime.
Yeah. Yay! And ladies, we do have more in extra. We're going to be talking from a tax perspective all about investing in real estate through your retirement funds. So that's going to be a really interesting topic. So if you are subscribed to Extra, stay tuned. If you are not, but would like to be, this may be the time to do it, right? Go to realestateinvestingforwomenextra.com and you get the first 7 days for free. So check it out, realestateinvestingforwomenextra.com. For those of you that are leaving us now, thank you so much for joining Amanda and I for this portion of the show. I look forward to seeing you next time. And until then, remember, goals without action are just dreams. So get out there, take action, and create the life your heart deeply desires. I'll see you soon. Bye.
I hope you enjoyed today's show. If you'd like to find out more about how to become a blissful millionaire, go to blissfulinvestor.com. See you next time.